This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, the SPY technical analysis, going over Bitcoin, gold/silver, and treasuries for the week of October 27th, 2025. And with that said, let's go ahead and jump straight into the data. Now, this week's going to be very interesting, even though we still have the government shutdown going on. Again, a large majority of the data will be delayed or postponed. However, we still have FOMC/Powell speaking on Wednesday, so that's going to be a very big day. And then Friday, we have the PCE data and GDP. So let's go over it. On Monday, pull up my paperwork, and I'm basically just going to go over the primary stuff. Yeah, we'll just kind of do this quickly. So Monday at 11:30, there's the Fed GDP now. It's currently at 3.9%. The forecast has it at 3.9%. I do anticipate it coming in at 3.8%. That is from the Fed, so that should still be released. I'm not really concerned about the earlier data on that day. We also have the 2-year Treasury note auction and the 5-year Treasury note auction at 1 p.m. Very important, as both of those are very, very key yields to look at. I'm anticipating the 2-year to pull down quite a bit, and I'm expecting the 5-year to pull down quite a bit. But there is the bull steepening going on with the treasury yields, where the short end of the curve is pulling upward, and the long end of the curve is pulling downward to kind of equal it out. So we may not see these pull down quite as much as we saw. For example, the 20-year yield pull down, it pulled down a whole 0.1%. So we may not see that out of these this time, but I am anticipating the yields to pull downward. Now on Tuesday at 10 a.m., we have the consumer confidence. That's obviously going to be very, very important if it's actually released. Now they're anticipating the forecast to come in lower. I would agree with that. We also had some sort of consumer confidence report last week of some sort that the Fed was going over, and that came in quite a bit lower. Um, so that should somewhat show that this one would come in lower as well if we actually do have the data come out. Then at 1 p.m. we have the 7-year note auction. Again, I am expecting the 7-year note to pull down quite a bit because it is starting to get towards the 10-year. The 10-year is sort of the benchmark midterm between the long end of the curve and the short end. So the 7-year starts pulling towards that midterm line. Um, I really anticipate it being around 3.84, give or take. We'll see though. On Wednesday at 11:30, we have the Fed GDP now again. This is a different reading than the 3.9% from Atlanta. This is, I believe, a written one, so I'm not really sure what that all is going to go over. At 2 p.m., we have the FOMC statement and the Fed interest rate decision. It pretty much will be a 25 basis point cut. Um, I'll show the CME data later, but the CME Fed futures, and you could click this in my channel description. I believe I still have it as one of the links, um, going over all the data and everything. So you can click that. It will show what the expectations from the overall treasury market and everybody is for whether the rates are going to hold, cut, rise, blah blah blah. Now, currently, the CME has it pretty much as a 99% chance that we will see a 25% basis point cut, and then the other you know very 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 small chance is a 50% or a 50 basis point cut. Um, I'm fully in the camp that they're going to go with the 25 basis point unless there's something going on underneath the data that we haven't seen. For example, if there's major concerns with the labor market data, that the Fed sees that hasn't been public, um, that could be a major issue, and they absolutely would do a deeper cut into that. I don't expect that though. Usually the CME Fed futures is very, very, very on point. Especially when the duration is within the same week. I'd be very, very surprised if it's not the 25 basis point. With that said, at 2:30, we have Jerome Powell speaking. Again, that's always going to be a pretty volatile event, and volatility doesn't always equal bad. I know a lot of people think that does, but volatility leads to spikes in both directions, both upward and downward, as volatility can go upward and downward. So with that said, um, I'm really anticipating the data this week to kind of push the market upward. I'm not really expecting the GDP data to come in good, but I do think that will help with the rate cut, overall leaning to push that downward with the yields and everything. Now, on Thursday, we have the core PCE prices at 8:30 a.m. and also some of the GDP data. Uh, I'm not sure if any of this is going to be released or not. Then at 10 a.m., we have Fed's Bowman speaking. Uh, Bowman speaks quite a bit, so not sure if they will really mention anything or not. It's something to pay attention to, but with Powell speaking on Wednesday, that does give us a lot of more clarity on what's going on in the overall macro scheme and what the Fed is looking at. Now on Friday, if we get the actual data sets we're supposed to, then Friday is going to be a very, very, very key day. See, I'm scrolled down all the way. So at 8:30, we have the PCE index data. We also have the personal spending. Um, all of that's going to be very, very, very crucial data. I do believe a majority of that data will be released, but I could be incorrect about that. At 9:45, we have the Chicago PMI. Um, that's usually a pretty important data set. And with the producer, excuse me, producer manager index, that's what the PMI is. Um, they're expecting that to go up. I don't really anticipate that at all, but we'll see. There's another Atlanta Fed GDP thing. Um, that's at 11:30 a.m. And then at 12 p.m. we have Fed members Bostic speaking. Again, kind of the same thing with Bowman. Whatever Powell says this week is really going to lead the market in terms of pretty much everything. I don't think any of the Fed members speaking after the fact will really push the market one way or another. So unless they say something that's super crucial, but I'm not anticipating that. So again, just very, very quickly, um, unless we get the consumer confidence on Tuesday, it's really going to be all about Wednesday's data and Friday's data. So with that said, let's go ahead and get into the earnings. Now we do have a bit of a busy week this week with the data sets, or not the data sets, but the earnings. On Monday, we have NXPI in the after hours. That is a semiconductor, so that can move the market a little bit. I don't really expect a miss or a beat to really push the market a whole ton, but the last time I said that about Oracle, they ended up getting some $600 billion deal or something. So, always keep your head up. With this being a semiconductor, they can always do very good. So, Tuesday in the open, we have SoFi and PayPal. I know many play SoFi, so I don't really have much to say on that. It's just something to pay attention to. And in the after hours on Tuesday, we have ENPH, which I know many trade Enphase. So again, same thing as SoFi and PayPal. I don't really have any leaning one way or another. Um, yeah. On Wednesday in the after hours is the really key day this week, besides basically between Wednesday and Thursday this week, as those are all the really huge names. On Wednesday, we have Microsoft, we have Meta, we have Google, Carvana, Starbucks, some really big names. It's mainly going to be Microsoft, Meta, and Google that are going to be the ones to, push the market up or down. Now on Thursday, in the open, we have LLY. I know many people trade Eli Lilly. I'm not going to be trading this earnings, so I don't have, you know, a leaning one way or another. Now in the after hours though, on Thursday, we have Amazon, we have Apple, we have Coin, we have MicroStrategy. Well, I guess it's just called Strategy now, and we have Reddit. So we also have First Solar, which I know some are trading that as well. Um, Again, I don't really have any leanings on the tech earnings right now. I do know that majority of the tech charts are looking quite bullish. So unless any of these earnings really fail, I'm not expecting the market to have a bad week. I'm expecting the market to basically have a pretty good week with the earnings. Everything's really poised to push upward right now. Just looking at the technicals off the chart anyway. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis for SPY, as always, let's go ahead and check our moving averages and our Bollinger Bands. Now for the 5 mile, I have it leveled, or I have it written down as 674. Currently it's at 671.88, but very, very likely that will be opening up on Monday at the 674. Now the 10 mile is at 667.49 and the 20 mile is at 667.48. So they're literally right on top of each other. The 10 mile will be pulling above the 20 mile though on open tomorrow, so just be aware of that. But the moving averages are pulling back bullish again. Now the 50 mile is at the 656.88 and the 200 mile is, well above that 600 range now. It's at the 604.15. Now we are getting very close to the upper Bollinger. The upper Bollinger is currently at the 678.23. I believe I have this marked down for 682 if I remember correctly. Um, this should open up quite a bit with where the market closed on Friday. And we will discuss the upper Bollinger move in just a little bit because we actually did not tag that level on Friday. So that did not start the upper Bollinger day one, but that is extremely close to triggering. So just be aware of that. And we will discuss in just a second here. Now, the lower Bollinger is currently at the 656.73. That's extremely likely going to pull upward towards the 660 range. It might even pull up to the 665 throughout this week if we do have that upper Bollinger move towards the 685 range. Now, with that said, the moving averages are all basically set up to be in a bullish stance. However, the 10 mile is not going to be very far above the 20 mile, so things can shift downward very quickly if we do have some potentially bad news or bad earnings, then the moving averages and the price can absolutely pull down very, very aggressively, very quickly. Okay, so just be aware of that. But we are seeing a lot of bullish structure. I'll cover the structure in just a second. But one thing I want everyone to be aware of, like I said, we did not start the upper Bollinger day one mechanics, and that puts the market in a really precarious area. And that area is being below the upper Bollinger but above the 5 mile moving average. Now, the being above the 5 mile is technically a bullish thing, as if the market rejects the 5 mile and pushes upward, then that's obviously going to give you more, you know, more of an upward trend. It's going to give you more price action upward. You're going to see a higher price from that. But with it being below the upper Bollinger and continuing to see rejection, because we've rejected this now multiple times, and usually these upper Bollinger rejections where we stay above the 5 mile but reject the upper Bollinger usually turn into large sell-offs. This is exactly what happened prior to the major correction in February, that many of us were super, super bullish in this range. The moving averages were getting pretty nasty, and then they started curling back upward, looking really good. We closed below the upper Bollinger that session. I don't remember the exact price, but it was above the 5 mile and below the upper Bollinger. And from that came, you know, doom basically. So I'm not saying that's what's going to occur here. It's just you do have to be extremely, extremely, extremely careful, because while it looks super bullish, those rejections turn into super, super large rejections. Okay. So, for example, if Monday we continue to see this type of movement where we're still above the 5 mile, not testing the level, and we're below the upper Bollinger, then to me, that shows kind of a rejection of the upper Bollinger. And to me, that would show that at least they're going to want to test the downward supports. And that would be, the 5 mile, the 10 mile, the 20 mile. We did actually have a very good 20 mile test, a week and a half ago. And with that 20 mile test, there is still plenty of room to continue rallying. Like I said, if the market wants to take the upper Bollinger, I believe I have it written down for 682. They would have to close at or above that level come Monday or Tuesday. So assuming they take that level or above, we're basically going to see the 685 to the 687 range very, very easily. So if you're bullish, then a rejection from the bottom from the 5 mile upward is a very, very good time to buy calls, because very likely your room from there is going to be essentially all the way from the 674, 675, all the way up to the 685, 687 range. So huge, huge, huge range right there. But if we reject and we start, you know, testing the 5 mile, rejecting the 5 mile, rejecting the 10 mile, potentially rejecting the 20 mile, then what that will do is pull the 5 mile below the 10 mile, and it will pull the 5 mile below the 20 mile. And when the 5 mile is below the 20 mile, the 10 mile will then pull below the 20 mile again. And kind of what I mentioned before is that this can pull down very, very quickly. And with there being major data this week and major earnings, the potential for that major pull down is very large if we do not, have that very, very strong upward move. Now, the upper Bollinger is a two-part move, or, it's a 2-day move for hitting the high into the higher high, and then from that, the downward consolidation. So if we are going to have that upward movement, then, I wouldn't really be worried about this week having some crazy earnings crashing the market. Usually those movements hold extremely well, and usually you don't go from the upper Bollinger down into support. Usually it takes a slower consolidation down to that range, and then you could start testing your supports. So that's kind of what I'm looking for from the moving averages. But going over the actual just 4-hour chart, we have super, super bullish structure. Okay, and let's go ahead and turn on our drawings. Let's see. We were in this very, very large consolidation channel. We created that double bottom like I mentioned, I believe last week and the week before, is that this could turn into a very, very, very strong double bottom. And from that double bottom, we created the liquidity to test the upper side of this consolidation channel. That still wasn't enough liquidity yet, so we needed to basically make a cup, and from that cup, create a handle. From that handle, we got the breakout. Now we're above the upper consolidation line, and that's basically where the 5 mont is. So a bounce from there would be a very, very, very clear signal that we will be pushing to the upper Bollinger, and we will be essentially going to that 685 to the 687. Yeah, and from there, the moving averages would pull above this range. Pulling above this range, going from the upper Bollinger, we could then consolidate downward, retest supports in here, and continue seeing upside. So that's the bullish thesis. The bearish thesis is that they break through this channel and re-enter this area. Now, re-entering this area doesn't automatically make it bearish because there is this buying channel right here. Now, from that buying channel, we would have to see a bounce upward for this type of movement to be bullish, because if not, then that turns into an inverse cup, which also completes a head and shoulders. If we start building more liquidity in that range, and then we can break down through that channel, which again, that's that super, super strong buying channel. I'll show it on the daily time frame in a second. But that would give you the liquidity to do so. So that's kind of the bearish thesis. But the first thing we want to see with any form of bearishness is either we're going to push the upper Bollinger or we're going to test the 5 mont and start rejecting it. So if you're going to short, you have to wait for either the upper Bollinger push or you have to wait for that 5 mont rejection. Okay, if you try to short before that, I guarantee you're going to get burned, unless some sort of data set or something saves you. Uh, but from the price action and the structure and everything, this is looking very strong that it wants to move upward. Okay, now let's see here. So that's the SPY. Um, Again, we have a ton of data this week. We have a ton of super, super strong earnings this week. And by strong, I just mean, they're very large companies. They're a lot of the Mag 7 and two of the largest Bitcoin companies, with Coinbase and Strategy. So, yeah, that's the SPY. And since I mentioned Strategy and Coin, let's go ahead and go over Bitcoin. Now, Bitcoin has been in a sort of precarious range. However, this is an extremely large buying channel. I don't know why this did not tag this range up here. Anyway, this is an extremely large buying channel. This buying channel has been holding weight for over a year now. Um, Very, very, very strong. Okay, so with that said, talked about this last week how this can be a double bottom. Now, it does look like so far it's creating a double bottom. And not only is that creating a double bottom, is that we created a cup right here. And it's a little hard to see because it is the daily time frame. I'm going to zoom in so you can see that. But we do have a cup formed, and from that cup, we should form a handle. And from that handle, we should break out to the upside. Now, I do have this marked all the way back to the 126 range. I don't think that'll happen all within a few days. However, we do have extremely, extremely strong or, important tech earnings this week and extremely important Bitcoin company related earnings. Now, I don't think in an earnings from strategy or coin is going to push Bitcoin itself, but you always have to be aware of that the potential is there. With that bullish structure built, Um, the upside bill back to this all-time high looks extremely good. Um, this essentially is what you would call a fair value gap, and it's just filling up all the selling that occurred. Um, I don't have a leaning on Bitcoin right now, one way or another, but it does look extremely bullish. Okay, unless the market starts seeing some real, economic events or some major tech selling, then this should absolutely see the all-time high filled back up. So, how you want to correlate that to your technical analysis or how you're going to trade this week, you know, that's up to you. Now, I did want to go over gold, and this is the actual ETF. It's the GLD, the Spider Gold shares. Um, I was considering showing the actual futures chart, but I think it's a little easier to see within the ETF. Currently, right now, we're between two consolidation ranges, and it's this range right here and this range right here. Now, one thing we know about being between consolidation ranges is that it kind of creates a consolidation range. Okay, but it creates a range that the market really doesn't want to be in. It's working to build structure to either push back upward and fill this very, very large gap all the way up to the upside again to the all-time highs, or it's working to break back down to re-enter this channel. And knowing how consolidation channels trade, they like to trade all the way from either the bottom to the top or the top to the bottom. So the real expectation is that right now we're in between a very, very key range. And from this key range, based on the data this week and everything else, it's going to absolutely tell the story of which consolidation channel we take here. If we take the upper consolidation channel, I'd be writing calls all the way back to the all-time high. I would not even think twice about that one. Um, yeah, yeah, this is basically an accumulation range. Um, it doesn't really look like they're trying to short this down. However, they definitely can. Now, this is the 4-hour chart, so I will go over the daily chart in just a second here. But this potentially can turn into an inverse cup if we see continued selling, okay, which so far we're not. So far we're seeing actual just buying to the upside. So what my expectations are is to form some sort of bullish liquidity within here to push upward and reclaim that major consolidation channel. Now, again, this can turn into an inverse cup very easily. If that turns into an inverse cup, we will be within that consolidation channel and the very, very, very high likelihood that we sell all the way down to the bottom of that channel, which for GLD, that's all the way to the 360. That would be extremely high. Okay. I'm not anticipating that though. I'm really anticipating essentially the all-time highs to be taken again. And this chart really kind of reflects not only gold, but it reflects silver too. I do have a position in both gold and silver. I am expecting the bullish upside. I don't really expect further downside selling, but one thing to be aware of with gold is that apparently as of Sunday the 26th, the Trump administration is potentially wanting to have the Treasuries sell off the gold positions and basically liquidate the gold position and buy into Bitcoin. Um, as they're trying to get Bitcoin to basically 244,000, uh, each coin, and they want to use that to pay off the, trillions and trillions in debt. That's their plan anyway. Um, I'm not really gonna make an opinion on it other than I think it's ridiculous, and I would be absolutely shocked if they did that. I think it would absolutely dump the price of gold super, super low. Um, I don't think that's going to occur. I think that that idea is going to be highly rejected in the Congress, highly rejected in, the Senate and everything else, and just not going to pass. And I think, Besson would be a fool to even try to agree with that plan. That's just my political take on it. Now, with that said, again, I am bullish on gold and silver right now. I do have calls for the end of December. Um, Depending on what channel we take here, if we take this this lower consolidation channel, then I will have to sell those calls. If we take this upward consolidation channel, then I'm going to be writing those calls basically until we push all the way back up to the all-time highs, because that would fill the fair value gap entirely. Now, again, on the daily chart, do have some nice structure. We do have a very nice inverse head and shoulders forming here. So that does look very bullish to me. I'd be very surprised if this continues selling downward, basically. And finally, going over TLT, I know there's a lot going on in this chart, so I'm going to very, very quickly explain it. This yellow dotted chart right here, or this line right here, is a major but kind of minor buying channel within this larger orange channel. Now, we've been talking about TLT for quite a while now that we were looking for this upward bounce. And from this upward bounce, we had a concern about this 92 range. And our concern is that it would basically close this gap at this top of the cup, form that cup, and then from there start rejecting. Now, this rejection is bullish. Let's just be clear about that because this is a bullish structure. This is within a bullish channel, but we don't know how far that's going to sell down. Now, a really, really, really key area of liquidity would be right at that 89.26. I don't anticipate yields dropping that low. I fully anticipate them basically bouncing in this range and continuing upward. However, going over the moving averages and the Bollinger Bands, I can actually, oh geez, hold on. I just deleted the Bollinger Bands somehow. Um, Second. Okay, well, I'm gonna have to fix that in a minute. But anyway, it would make a lot of sense for the treasuries to pull down to the 20 mil. And the 20 mil is in the purple there. It says the mid band, but the mid band is the 20 mil. So, they're the exact same thing. So you can use that to your advantage or not. It's up to you. Um, Treasuries pulling down to the 20 mil would make a lot of sense, even though I haven't marked down all the way to this, large gap of liquidity. But essentially pulling down to the 20 mil, and with the 20 mil moving upward, it would be even higher than that. So probably close to the 950 range, give or take. If we pull down to that range, for me, that would be a major buy the dip opportunity. Um, just because the whole last year we've been consolidating, and that means going from the upper Bollinger to the lower Bollinger, upper Bollinger to the lower Bollinger. But you generally stay above the 20 mile and head to the upper Bollinger the majority of the time because the markets are generally buying. That goes for almost any market, whether it's crypto, Bitcoin, um, equities, housing. Everything is always trying to push a higher price. So, with that said, if we get to the 20 mile, I'm really anticipating a move like this where we pull down the 20 mile and then right back up to the upper Bollinger as the upper Bollinger expands again. And that would create the liquidity to keep pushing up higher and higher. Now, our next gap is up at the 95.20. That's why I have it in bold in the orange. I do kind of expect FOMC and everything to help us get to that gap pretty quickly. I'd be surprised if we break down under the 20 mo. Now, I do want to show the moving average. Let me fix it one moment. Okay, I got it fixed. So, with that said, um, we are currently below the 5 mo, which means that we can head upward towards the 5 mo, retest the 5 mo, and head back up to the upper Bollinger. But with us rejecting the 5 mo so far, and it's not really a so far, this could still be testing that level, as 5 mod tests sometimes like to test the lower bounds of the level and then the upper bounds. Um, with us testing the 5 mod, uh, we could see again the buying all the way to the upper Bollinger, but usually from the 5 mod test, the market is going to push to the upper Bollinger or is going to push to the 20 mod. Now, with it pulling downward and currently a little bit above the 10 mod, that does give us a lot of room to potentially pull downward towards the 20 mile. Now, again, the 20 mile currently is at the 90.33, but that would be pulling up. Even if we continue selling downward towards it, that'd be pulling up very likely towards the 90.50 range by Tuesday or Wednesday tops. Um, Overall, I am bullish on TLT. I do have positions for the end of December. I am expecting TLT to basically push above this 95 gap and start aiming towards this 97 gap. Um, well before that time, I'm really anticipating by mid to end November that we'll hit those levels and then we can, work on a new position when we find a great opportunity. But overall, I am bullish on this. I do think that we will have a small bit of just support testing and then back into pushing. Many of these gaps closed again and essentially closing this very, very, very large cup to the upside. So yeah, that's the treasuries and pretty much all the TA. Um, I am just going to very, very quickly take a look at the HIG, but let's see here. I can find it because I'm blind. Now the HIG does show some bullish structure. Um, Again, I am taking dated puts on this. Currently, I have positions for December 19th, but if we push for the upper Bollinger here, that would take us all the way basically to the 81.50 range. I would probably try to close those puts and get puts for maybe maybe March. March sounds good. But I'd probably try to take 80 strike puts for March. And when I do say sell those puts, I would wait for the support test downward to sell those puts so that we can at least get maximum premium from them. You don't want to sell them when they're up in the upper Bollinger because that's the worst place to sell your puts. Um, so yeah, uh, this does look like some bullish action within the HIG. The structure looks very good, but again, I am still going to continue shorting the HIG because that's sort of my way of shorting um, tech and equities overall, and kind of just a hedge to everything else I got going on in my account. So it's not like I'm loading the boat expecting HIG to be some massive sell-off and make millions from it. That's not the type of trade it is. This will continue climbing with TLT. This will continue climbing as the yields drop, but there will be a point where the risk yield isn't there anymore. Um, Between the actual treasuries and the upside equity risk if the equity starts selling off anyway. And if the treasuries gain their weight with the yields falling and everything. So yeah, just be aware of that. This is kind of bearish movement for TLT overall. Um, this is bullish movement for equities. This is very good for if you're bullish on SPY and tech and everything. So yeah, going to end the video there. I hope you all learned something from it or enjoyed my perspective or whatever. I hope you have a great trading day tomorrow and throughout this week. And I will talk to you all in tomorrow's video. Thank you all for watching and take care, everybody.